It's another business day. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations. That's what we do right here on Business Morning. I'm Ini John Mekwa. And we start the way we normally do, which is to tell you updates from the global oil space. Prices fell nearly 1% on Tuesday as supply concerns eased with the resumption of loading at a Russian export hub, which was briefly halted by Ukrainian drone and missile strike as traders continue to assess the impact of Western sanctions on Russian flows. Look at this morning. That red is what we see. Brent futures down 56 cents. That's about 0.83%, $63.64. WTI, that's the West Texas Intermediate Crude futures, that also lost 54 cents. That's about 92%. Or 0.92% a barrel. And then crude oil is trading marginally lower as reports indicate that loading have resumed sooner than expected at that hub, according to a senior White House official. President Donald Trump also is willing to sign Russia sanctions legislation as long as he retains final authority over its implementation. That's the condition he's given. Trump had said that Republicans are drafting a bill to sanction any country doing business with Russia, adding that Iran could also be included in that list of countries. We're heading to the market now and see how the market closed. Unfortunately, more than 1% in the red is what we closed at the close of trade yesterday. That was a huge drop, especially looking at the recovery, we just started on Wednesday last week. Of course, we did lose a lot of money, more than 1 trillion naira shaved off the market cap. And the oil share is down from 147, which it opened with, to 145,000 level. Volume lost 92%, value in the green, but deals continues to be in the red, closed in the red last week. Top trades were tantalizers. Some news going on about tantalizers, and that attracted investors right there. Aradel is also back, as well as GT Co. So they made the top trades yesterday, but top gainers were Sovereign Insurance, NCR, and tantalizers. I told you about that earlier. Top losers, Dangote Cement. So even though we did hear news of Dangote Cement having some commercial paper, trying to raise some capital in the market, but that did not shield it from that 10% loss that it closed with yesterday. Transcorp also went down yesterday, 4.66%. NMRware was also part of the top losers at the close of trade yesterday. Well, talking about the financial services, that sector has been rated as Nigeria's top performer in governance, maturity. Zenith Bank, Stanbic IBTC Holdings, and Access Holdings, they are leading in that structured ESG integration. This was indicated in the 2025 Independent Project Monitoring Company Limited ESG ratings report that was unveiled yesterday in Lagos. According to the Corporate Governance Institute, ESG stands for environmental, social, and governance, and it's a framework used to evaluate a company's sustainability and ethical impact. Based on the report, the three banks recorded the highest levels of structured sustainability integration, board-level oversight, and transparent ESG reporting, even as the sector continues to lag in key climate risk disclosures required under the IFRC S2.
Follow a rigorous framework. We assess companies across 180+ indicators aligned with global standards, which are: 1, Global Reporting Initiative. This is a widely adopted framework for impact reporting, helping companies disclose their significant impact on the economy, environment, and people. Then also we have the Sustainability Accounting Standard Board. We provide industry-specific standards, identify the ESG issues that are mostly financial material to companies' performance. Then the next one is Task Force on Climate-Related Financial Disclosures. This provides recommendations for companies to disclose climate-related financial risk and opportunities. Then we have the IFRS 1 and S2, which provide a general framework for sustainability-related financial disclosures and covers governance, strategies, risk and opportunities metrics and targets, and focuses specifically on climate-related risk and opportunities, and is aligned with the task force on climate-related financial disclosures, respectively.
And yesterday, one of the biggest news we had, of course, from the economic circles is Nigeria's headline inflation. The NBS recorded a drop to 16.05% in October from 18.02%. This latest report by the National Bureau of Statistics indicate a cooling of price pressures after months of sustained inflationary strain. On a month-on-month basis, however, headline inflation is at 0.93%. We saw an increase there, showing a slower pace of price increases compared to previous months. Meanwhile, year-on-year, food inflation remained stable. There was no change in food inflation. That's rather odd, yeah? 16.87, that's what it was in September, and that's what it was in October, according to the NBS. And looking at other parts there, in October, there's the urban inflation, that's dropped also to 15.65, and then rural inflation, that also dropped to 15.86 from 18.65, which is what it was in October. Meanwhile, of course, there are reactions trailing that. One reaction we got from the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rani.
Why that sharp drop? Because there are three things that are playing out at the same time. One, inflation. Two, disinflation, which means a slowing rate of inflation. And three, deflation. At this time last year, the prices have dropped by almost 2% to 16.05%. But one thing that we have to understand is that month-on-month inflation actually increased. But generally speaking, the inflation numbers look impressive. But since we did the rebasing of the inflation numbers in November last year, you are going to see an increase in the year-on-year inflation in November. So since we have gone down from 18.02 all the way to 16.05, this is a 3-year low. Please note that November into December, we're going to see an increase in inflation, not because the prices have increased, but because the base year has changed. And therefore, we're going to see a spike to maybe 18, 19. But that is a one-off trend. What is going to happen in December, the price will remain flat, and in January, they begin to drop again, because in January, traditionally, prices come down, and in January, people are broke because they're paying school fees and all of that. And also, it will coincide with the base effect wearing off.
So, of course, that's a major conversation for us today, looking at that drop, a huge drop, almost 2% drop in inflation numbers at this time. Let's have Halima Adediran, an analyst from Financial Derivatives Company, join us. Hi, Halima. Welcome to the program. Good morning. I wonder if you have felt this almost 2% drop in inflationary pressure in your daily spending.
Okay, so the inflation number that we just had, we'll see that the headline inflation declined much more than expected to 16.05, while the month-on-month remains elevated, and the other components too move in tandem with the headline, while the other ones remain flat. And so we would like to first note that the headline inflation that saw a drastic drop is as a result of the change in the methodology. So for one, we are seeing the impact of the change in methodology, which means the change in the base year, and also the impact of some policies taken by the government. And so this means the government and policymakers need to check very well the percentage or the significance, the percentage that is captured by the policy put in place, and the percentage that is really attributed to the change or the rebase of the inflation baskets and components and so on. Because when we have inflation rebasing, there is a change in the items that constitute the basket. That's for one. And there's also the change in the weight that is attributed to each item. And so this tends to change how inflation will react to prices change for each commodities that we now see in the inflation basket. So going forward, we might see an increase in the next month because we'll see shopping for Christmas, the festive period. And also another thing that is very good is the core inflation. We can see that it's also experienced a decline because of the stability in the exchange rate, and also because the manufacturing sector is becoming more improved in terms of performance. We see the last PMI that we just had. So it's slowing down the rates of imported goods, and inputs for manufacturers. So it's a good one, but we still need to know that the month-on-month captures the reality on ground, which means we have deflation, we have inflation, and we have disinflation. So policymakers must be cautious of how to really go about it. It's a good one, but you still need to be cautious when it comes to how or what the interest rate decision will be in the meeting that will be held by the MPC in next week. So before now, we were expecting status quo, but because the data looks a bit good, we could see an expansionary policy of maybe a 25 basis point reduction in interest rate. But on the general note, for household especially, we might not see the same decline in the cost of living. The cost of living might still be a bit higher, even as we've seen decline in the headline inflation and some other index of the inflation. So household might still feel the heat of the price pressure in the economy. But going forward, we'll see an increase because there's likely to be demand pressure because of the festive period.
You know, Halima, a lot of people did not expect a drop, certainly not a huge drop, even though, as you have brought to our notice, the reality would be comparing month on month, which we see increased. But, you know, because of that increase in the petrol price, no matter how brief it was, last month, a lot of people were not expecting this kind of a huge drop.
Yeah, that's what I said earlier, that the month-on-month gives us the exact situation where we are in, because it captures the current trend of private price movement, which petrol price is one of it, and it's mainly used by households and SMEs. And so that's why we are seeing it capturing and giving us the exact reality on ground. And so the headline inflation is there to give us a hint as regards the price pressure is tapering, but the month-on-month is still telling us its intensity as regards the day-to-day expenditure and the effects on household pockets. So those are the two differences and the impact and implication of the two.
All right, Halima, thank you so much for sharing FDC's findings with us. Halima Adediran is analyst with Financial Derivatives Company.
Thank you for having me.
All right, let's take this conversation further with the Chief Executive Officer of Cowrie Asset Management Limited, Mr. Johnson Chukwu, to also share his thoughts and findings on this drop on inflation, especially year on year, which is what we saw. Mr. Chukwu, good morning and welcome to the program.
Good morning, thank you for having me.
Great, Mr. Johnson. So were you expecting this huge drop? I mean, almost 2%. That's a big difference.
No, I think it was quite steep. I didn't expect it to be that steep. I expected we would have further moderation. My projection was around 16.5%. So I didn't expect we are going to have at 16.05%, coming down almost 200 basis points from where we were in September of about 18.02%. So I think that's quite steep. But if you look at those factors that drove down inflation, I think the core change was in food inflation. I think you need to change the figures here projecting. The food inflation was about 13.12% in October. So we saw a material decline in food inflation in October, principally because we are still in harvest season. If you look at the food index, you observe that the food inflation index actually, compared to October last year, declined by 0.37%. So we saw a reduction in food prices, which means we are seeing a deflation of food prices. And that happens because when the harvest season, we now have multiplicity of food items that are produced, including things like maize that are some households that cannot afford rice are now consuming. So I think the major factor that drove that is food inflation. Of course, we've seen some stability in the exchange rate, which had helped to moderate core inflation.
So FDC, Financial Services Company, is projecting that by the next month, and that's for November, that we will see a hike, maybe even if it's slight, because, you know, this takes us back to about a year ago during the rebasing, because the base year also has something to do with all of this. Do you also agree that because of the rebased year that's being used, we most likely will see an increase for November numbers?
Yeah, bear in mind that the rebasing, what they did for what they're doing this year is that they're using the average inflation figure for last year. And average inflation figure for last year was 33.18%. What that means is that every figure we're computing for this year is based on average for last year. So I don't think, because they are using the average for last year, the month-on-month inflation figure may not materially affect the all item inflation or the inflation figure that we're going to see in subsequent months, because they did not use subsequent. They didn't just adjust the figure for last year and use subsequent month on month as basis to compare. I mean, year on year as basis to compare annual inflation. They are now using the average of last year, which, like I said, is 33.18%. So that may smoothen up the impact of the year-on-year impact on inflation. So, but that does not take away the fact that it is possible the inflationary pressure will come up again as we move out of the harvest season. Like I said, the major driver of what we're seeing is food inflation, that we're seeing a deflation, which means price levels are coming down when it comes to food items. If you even look at an item like rice, you observe that the price of rice has consistently come down. I mean, we're now doing a bag of rice about 72,000 naira. They had gone above 100,000 naira. I mentioned the issues around maize, and a lot of the food crops that we produce are produced around this time. So that, as we move towards a planting season, the availability of these food items will dry up because we don't have preservation capabilities. We don't have silos where they are stored and we can have steady supply. So when we go past the harvest season, the supply will thin out and then prices could go up. So I think as we move towards a planting season, the price of food items will begin to inch up, and that could affect food inflation, which is the biggest basket. Bear in mind that based on the rebate figures, food and non-alcoholic beverages account for about 40% of the GDP of the inflation index, followed by items like transport, items like accommodation and restaurant. So, but the biggest contributor or biggest share of inflation is food and non-alcoholic beverages account for about 40%. So once you see an uptick in food items, we're going to likely see an uptick in all item inflation.
I was thinking, what about petrol? That also seems to run round for majority of Nigerians.
Yes, if you look at the petrol and you look at the segment where that has impact, it has impact on transportation. And we saw an increase in transportation about 1.7% in the month of October. That is year on year, which is comparing what the prices were as at end of average of last year and prices were at the end of October, in the month of October. So we saw an increase of about 1.7%. Same with food items. If you compare the food inflation, food and non-alcoholic beverages, you had about 6.4% increase year on year. But ultimately, the impact of petroleum products will dovetail in increase in transport costs. And because after the initial adjustment, it came down, but give and take, we still saw an uptick in transportation over the past 1 year. I mean, when you look at year-on-year inflation as of October.
So with this now, I mean, do you see another cut? Next week is MPC.
You know, interestingly, the MPC has a bit conflicted data they have to deal with. One, we are seeing a moderation inflation rate, but on the other side, we are seeing pressure on exchange rates. And so they have to balance the need to support economic activities by cutting and the risk of a further up pressure on exchange rates. So I think they will now be caught between, if we cut on benchmark rate, are we going to see additional pressure on the exchange rate? And that might deter them from any adjustment. So I think we may end up seeing an MPC meeting that will come with a decision to hold rates at the current levels.
Mm. And you know, CPP also drew our attention to something else, that even though we see declining inflation, the cost of living is still high. The issue of welfare is also, and the level of poverty measured by bodies like the World Bank is not declining. So I guess that the numbers have not spread, you know, to every sector of the economy yet.
You know, the reality is that if you look at household income, even at 16.05%, over the past 22 months, household income on average has been eroded by about 49%. Bear in mind that the basis of the inflation computation is about 33.18% for last year's average. And then we have 16%, 16.05%. If you add the two, you're going to have something like 39.07%, which is almost 50%. So it simply means that average household needed to have had their income increased by 50% for them to be able to consume what we are consuming in December 2023. So if that is the case, how many households have gotten a 50% increase in their household income? So as long as you now achieve that, your standard of living had actually worsened over the past 22 months because your purchasing power has been eroded by about 50%. And that's why most households are still not feeling the impact of this deceleration inflation rate.
Mr. Chukwu, I know it will be very difficult. I mean, if we expect household income to increase by 50%, where do we trace that source to? Do we trace it to employers who also have overhead costs increasing, or do we trace it to sales when we know that disposable income has also reduced? So from your view, we've been having this conversation of how to bring the micro and the macro achievement together. So now we're seeing impressive macro data, but the micro is still lagging behind. How do we bring the macro up to where the micro up to where the macro is?
I think the best thing is that we need to focus on the heavy lifting. You know, the truth is that the micro, the household income and the standard of living will naturally lag behind the macro economic data. Of course, the macroeconomic factors partly drive the micro. So we need to have consistent improvement in the level of productive activities, consistent improvement in level of employment opportunities, so that you're going to have households that have multiple income from members of the household. So you also need to have a situation where the real sector of the economy is growing and faster than the current growth rate, and while inflation continues to moderate. So it's only when we have consistent moderating inflation as well as opportunities for employment, which will give the employees the bargaining power. Today, the employees in Nigeria do not have the bargaining power because they can't negotiate higher wages when there is high level of unemployment. So that's what we get when we're going to begin to narrow that gap in terms of performance of the macroeconomy as well as the performance of the micro, that is households and the firms. So, but the key thing is that we must maintain a positive trajectory, which is if we see inflation moderating, you get to a point where the inflation rate will be at a level that increase in household income will catch up. But to drive household income, we need to create employment. We need to be a productive economy that people will have choices. Employees, people with skill will be in position to bargain and get the right remuneration. And then at that point, we begin to have labor union that will be saying, look, we need to index increase in salaries to inflation, because now we can't do that. In other countries, they do that. As inflation is increasing, the index it changes in your remuneration to change in price levels, so that you're not worse off if price levels are increasing.
So, I mean, all of this now, I guess at the heart of it, we have the reforms, which President Bola Tinubu is pushing. We've had a lot of praises, but of course, we also had some knocks. Which way do you think this reform should go now to maybe accelerate this need to balance the households and the bigger picture, that's the macro?
I think the reforms need to now focus on sectors of the economy that has capacity to grow, areas we have comparative advantage. And I believe that there are several sectors. Take, for instance, solid minerals. We need to do everything to formalize the solid mineral sector and increase our export commodities beyond crude. That is a low-hanging fruit, because we have the solid minerals beneath the ground. Then we need to look at other sectors where we can quickly, the agricultural sector, where we can increase the level of beneficiation, the level of transformation of raw materials into some level of semi-finished or finished goods. So we don't continue to export raw food items. That is also a low-hanging fruit. And then we also need to improve on our ability to store. Look at, for instance, tomato. We produce a lot of it, but you have very few companies that are actually transforming tomato into tin tomato in such a way that you can store it for a long period of time. But what we have, we produce and we waste the next day because we don't have the capacity to store it. So we need to improve on some of these things. Improve on sectors like agriculture, that we have the entire value chain in our agriculture sector. We don't just produce cocoa seeds and export and import focus. And I mentioned agriculture. And then those sectors, they will incentivize operators in that sector, and that incentive will help those people to invest in those sectors and improve productivity. We have proof of concept. We have done it in cement, and it has been successful. So we can repeat in other sectors where we have competitive advantage.
Well, I mean, Mr. Chukwu, these are ideas that have been bantered round. You know, it's not new. So I don't know if there's anything new we could be doing. We've talked about the potentials in Nigeria's agriculture, value addition, value chain. You just talked then when we were talking about the inflation numbers of why prices are low now, but in a couple of months, we can't expect it to remain low. And that's because of the lack of preservation and storage systems, you know, that would preserve some of these things. So, I mean, these ideas are not new. Sometimes one wonders what's holding the government, the private sector, what's holding us back?
Well, that's why they say talk is cheap. Action is the problem. And we also say that the devil is in the details. In the government, I mean, these things are, like they say, open secret, that we can do these things. And I use the proof of concept. I didn't use the case of cement. We've always had limestone in the country since God created the world. But it took the government to come up with a policy to incentivize people to go into cement production, for the likes of Dangote, the likes of Bua and others to go into strong cement production. And when I'm beginning, we are becoming a net exporter of cement. It's just what the government can do. It's government to decide that we want to focus on this area, and then come up with the right policies, come up with the right incentives, and come up with the right deterrents for people that don't want to comply with government policies, and then follow through the implementation without any deviation. We did it in telecommunication sector, from 450,000 active lines to over almost 200 million lines today. But key thing is that we must know that economic development, particularly this sector development, is driven by policies of government, including use of fiscal tools, tax holidays, tax incentives to drive, and then trade policies that will create necessary barrier if need be, that will drive economic agents to go into those sectors. We can do it in agriculture sector. We can do it in solid mineral. I said today, I mean, I was looking at the map of Nigeria solid mineral deposit. We have almost everything. But then what we have in Zamfara is that we have the highest level of insecurity, because we have artisanal mining where bandits are the one mining what the government should have created structures to mine and export. We have a lot of granite Are we cutting the granite and refining it? No, we're not. Sometimes we cut the granite and export the raw granite to Italy, and they refine and we put at a very huge cost. But the government can create the incentive and would encourage people to go and set up the necessary equipment to refine those, to cut and refine those granites.
Well, I guess the demand is very much. Maybe that's why, because I know that when it comes to solid minerals, Minister Alake was very heavy when he just came in, talking about the illegal mining and curbing all of that, dealing with arresting even illegal miners. But I guess it's a huge work to do, and so we'll still have to give him some time, or give the ministry some time, so we can see some of those. But the unfortunate thing is, the illegal miners or the illegal actors are not waiting for us. They're exploiting, you know, all of these things that we have, especially at this time when we have renewable energy in the air, and we have the potential to produce a lot of them. Unfortunately, those things are being stolen or lying fallow somewhere in the northern part of the country especially.
Yes, that's why I said it's not that this is impossible to do. We have countries that are building, like you just said, building huge solar farms. And if you look at the northern part of the country, we can actually set up solar farms in the northern part, generate enough power like they're doing in China, that generate enough power that even feed the entire north. And we have gas deposits in the south. So what are we doing with it? It beggars logic that we still don't have enough power supply. And that is very critical for us to be a productive economy, because you must energy. Everything that functions, including you and I, function based on the supply of energy. So we must, as part of those process of transforming the economy, focus on investing appropriately in the energy sector to generate enough power supply, to transmit enough power supply, and to distribute enough power supply. But even the island mode generation, the solar generated power, we have enough sunlight, to be able to be generating enough power to supply the country and even sell to neighboring country. But unfortunately, these things will be driven by right incentives, right policies that will encourage you and I to say, look, this is a good area to invest. Without policies, nobody will invest blindly.
All right, Mr. Johnson Chukwu, thank you so much for your time on the program and sharing your views. Chief Executive Officer of Cowrie Asset Management Limited.
Thank you for having me.
Let's take a break now. When we come back, we'll head to the financial sector. Please stay with us. The micro, medium, and small economy, micro, small, medium enterprises, MSMEs. They are the engine of any economy, and we've seen that even in Nigeria, providing majority of the jobs, and yet seems to be the least in accessing what they really need. Top on the list, finance. Well, they always have their meetings every year, and they've had the one of this year. It's a 3-day event, has started, the MSME Conference 2025, and they have attracted some dignitaries to come discuss their challenges and possible way forward. The engine of a productive economy remains small businesses, and in Nigeria, this group has been credited with the creation of over 90% of existing jobs. The National MSME Conference is an annual event aimed at solidifying their position and, more importantly, empowering players to get even more productive.
263,000 businesses have entered the formal economy through our business registration process. We have raised 12 billion naira in affordable financing, and we have mobilized these to unlocking enterprises in Nigeria. Across the Federation, 18,000 nano businesses have received support through our conditional grant scheme. Many have opened bank accounts for the first time, and more than 3,110 cooperatives have received support under our One Local Government, One Product initiative.
And a vision.
Business mogul Mr. Tony Lumelu has some encouraging words from his experience operating in the country.
The private sector in Nigeria and Africa must be the engine for our renewal as a people, as a continent, and as a nation. Here's the bottom line. Nigeria will not be built by government handouts or foreign aid. Foreign aid is important, is good in solving some problems. And government role is extremely critical for us to develop. We know and we say that Nigeria will be built by entrepreneurs, by you in this room, by building businesses that create jobs.
Summarizing the challenges and opportunities for businesses in Nigeria, the Minister of State for Industry, Senator John Eno, shares executive backing and plans for the future.
The government of President Bola Ahmed Tinubu is serious about industrialization, serious about entrepreneurship, and we have validated a policy which in the next sphere is going to be approved. It becomes a Nigerian industrial policy. We are convening a ministerial roundtable. Get every player that is relevant in the energy sector to sit together in one room and try to provide solutions to the energy challenge that industry.
It will also feature MSME fair, exhibitions, a pitch competition where small businesses will win up to 20 million naira in grants, and many more. Right now, let's talk about the financial or the payment system in Nigeria. We do know it's a bit of celebratory in that area now. Just a week ago, the Nigeria Interbank Settlement System, that's NIBS, they achieved a milestone, one they say is a major one in Nigeria's financial technology landscape. It's the successful execution of the first live transaction on a national payment stack, that's the NPS. They say it's the next generation infrastructure designed to unify and modernize Nigeria's electronic payment system. It happened November 7 between a fintech and a traditional bank, and it's been called a defining moment for Nigeria's digital payments industry. And so now processing transactions is going to happen in milliseconds with instant settlements, demonstrates speed, scalability, and reliability of the MPS, a new engine that's supposed to power all of that, and also security too. Of course, that's very important. So let's talk to an individual from that ecosystem to tell us exactly how secure and reliable this is and what to expect. He's the Chief Executive Officer of Rank Group PLC, Mr. Femi Iromini. Mr. Iromini, good morning and welcome to the program.
Yeah, thank you very much. Thank you for having me.
Good to have you. So they say it's a new era with this new NPS. So we can expect, tell us what we can expect. We've been told, you know, but you are in the system. Tell us what to expect.
So primarily, when you look at the payment system in Nigeria, it has been progressive over the years, right? In terms of speed and some other dependency. But the goal for NPS is such that it can be unified together. Looking at the banking sector, the telecommunication, and also fintech. Now to add to it, government agencies. And when you look at this, it's such that when you unified everything, it makes it more seamless, more efficient, right? Now, to take it a step further, it's not just about the unification alone. Digital identity system comes with it as well, which enables access, financial inclusion, right? So all of this forms the foundation to improve financial inclusion in Nigeria. But the interesting part is all of this connects to major policies around tax reform, major policies around credits, right? For instance, things around your revenue insights will be connected to it. Government relief, like social benefits, will be connected to it. Also remittances as well. That's another angle. Now, the most exciting one for me is the fact that open banking is a major part of it. And what does that mean? With open banking, that means financial institutions can have access to data to underwrite better, which reduces the cost of underwriting. It makes credit to be more accessible and also make it affordable. So it's a major progress that ties everything together, basically.
So I'm sure a lot of Nigerians will be excited when you say it ties everything together for some reasons. First of all, a lot of times you hear complaints of we have our data scattered everywhere, you know. So when you say it's unifying, how unifying is it? If you could paint a picture for us, because Nigerians will go, you want to open an account, you have one information, you drop there. You want to renew your driver's license, you also have to put information right there. One would expect, can it get to a point where I have a code? So I just mention my name or give you my code, and then you get all my information. It's supposed to be one central data bank.
Yeah, I think we're on the journey to that already. When you look at the policy around the tax reform, the baseline is around being able to unify the identity either from BVN or to NIN, right? So the same thing connects to you having a digital identity. And really, when you have a digital identity and all the ecosystem players, the banks, the fintechs, because when NIPS was created, fintech was still very nascent, right? So when you have all the players, the banks, the fintechs, telcos are major players when it comes to financial services now. And then the other bits are more like the government agencies, MDAs, connected to it, then bringing consumers into the fore. It makes it easier such that the baseline element for access is addressed, which is identity. That means if I want to access services from from fintech, I can use a unified identity system. So I feel it's the foundation to us having singular identity system when it comes to accessing financial services.
The other thing that a lot of Nigerians will be excited about if this can do is security. So we see it as one of the promises. But you know, as we speak, somebody gets defrauded and it goes from the person's account to another account. And you would expect that it should be an easy peasy to get, you know, the defrauding account since it's still in the same system. You know, so if we say it's unified and secured, can we access or at least, you know, get?
So when you check the initiative, one of the core elements is around fraud management, right? And when you look at fraud, you cannot look at it in isolation. Regulators are very important. They're very instrumental to it. And it's commendable that we're going in this direction. So what that means is when there is unification in terms of the financial services, it means that to a good extent, if a fraudulent person performs any action with a bank, right, the data sets are not in silos. In reality, they are connected to the fintechs as well, to the telecommunication, your phone number, which is a major identity, major unifier in Nigeria. So in reality, it makes fraud-related issue to be traceable, right? It makes some level of enforcement to be initiated, right? So in reality, when it comes to fraud, I feel this forms a good foundation for us to start tackling fraud, because it's not just about speed alone. It's a lot more around security, around the services we're providing. So to a good extent, your data, your history can be traced whether from the traditional banking system or financial banking system or even telecommunication. And all of this now connected to the government entities as well.
So even when we have the system, yeah, I hear you there. Even though we have the system, we still need people who are willing.
Enforcement.
That's where the enforcement come in.
I feel the current players, when it comes to government, when it comes to our policymaker, they're doing a lot. They're deliberate, actually. And often, the fact that they've been in the industry before, a lot of this policy are tailored to what the market needs, right? So I can see that willingness to actually tackle this issue based on all the policies I've seen. Because when there's security in terms of our payment, in terms of our financial services, it rolls back to the fact that people have confidence in the system. They can remit their tax, they can make their payment, they will not be hiding their money, basically. So, yeah.
Okay, I'm talking about confidence. I know you're preaching the message of the African model for savings and investment.
Yeah.
Do we want to go back to our Konko? Is it Konko we used to call? You know where you
Kolo. They call it Kolo.
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 Is that where you want to take us back to?
So it's actually it's more like where finance started, right? So think about how humans emerge. Think about the barter system. where you give me yam, I give you cassava, I give you shovel, right? Think about communal storage. Someone is going to build the storage, they all come together and they exchange. Now, from that model was built on shared trust, mutual respect. They're able to de-risk it with my kinship, my fellow kinsmen. Do you understand? And in reality, the same model evolved into what we call the rotational savings model, AJO. They call it a SUSU. Is not just about Africa, it's something that is global, right? And when you look at it, in other countries like Francophone, they call it tontine. In some other part, they call it SUSU, right? And all of this draws from the knowledge of communal system. Humans are not created in isolation. We're social beings. I'm meant to connect with you, which is your alumni station, your worker station, professional station. And when you look at this in terms of baseline, community is the major element of how we live, how we survive, is how we breed, right? And for us, there's a lot that has been done when it comes to rudimentary traditional financial services. And what we've seen is more like the gaps, which is a lot of things is still manual. An average person, they still do a job, contribution. You're getting married, actually. They're doing HYB, right? Everything has to do with contribution. And when you look at all of this, they're done manually. There's no transparency. Old student association, they want to build the structure. Let's create a WhatsApp group. We create an account there, they're contributing, right? So all of this is still manual, not totally transparent, is not scalable. And even they're not really backed by financial instruments. And for us, we're not building something that is out of the world. What we're doing is being able to bring technology to meet people where they are. This is Africa. So how can we leverage on technology to build something that is relevant to people and being able to achieve our own vision? Our vision is simple, to make prosperity common. That means if you want to make prosperity common, it should not be too complicated. Make it simple, relate to something social to them. And that is what we're doing with our model in terms of building a money app that enables people to be able to save together, invest together, grow together. Wealth can be created together. And in reality, all of this is backed by top-line technology and then strong financial instruments, right? And really, yes, that has been the model. That's been the model.
Well, I mean, taking us back down there, it sounds like, I mean, old school is still the best. Yeah?
It's still the best.
We just need to apply a little bit of technology on it.
Yeah.
All right, thank you so much for coming on the program. Chief Executive Officer of Rand Group PLC, Mr. Femi Romini, and for sharing your views.
Thank you very much. All right.
All right, let's take a break. When we come back, we'll go global. Please stay with us. We go global now with Ladi Williams.
Thank you, Inni. So a lot of stories to cover this morning. We see Google. They're making a targeted push into Africa's public data infrastructure, announcing a $2.25 million investment to modernize and unify data systems across the continent for the AI era there. In partnership with the UN Economic Commission for Africa, Google built the original data commons powered by its open knowledge platform to integrate data sets on critical issues like food, security, trade, and development. The project also focuses on building local capacity. $1.5 million will go into AI training for national statistical offices in Ghana, Rwanda, and Senegal via the Paris 21. Then we see Amazon.com Inc. is set to raise $15 billion in its first U.S. bond offering in 3 years as the tech giant doubles down on its artificial intelligence build-out. The six-part issuance, which spans maturities from 2028 to 2065, comes amid an $80 billion order book and underscores Amazon's push into capital-intensive AI infrastructure. The debts will be used for everything from repayments, working capital, to strategic acquisitions and buybacks. That's for Amazon. Then minutes from the Reserve Bank of Australia's November meeting reveal a cautious stance on future interest rate cuts, as officials flagged uncertainties around inflation and labor market conditions. The central bank emphasized that while easing may be in sight, any cuts will depend decisively on incoming data rather than calendar timing. Then today, the flagship cryptocurrency, Bitcoin, tumbled below the $90,000 mark for the first time in nearly 7 months, sliding roughly 30% from its late October peak. That was about $126,000. The drop reflects growing doubt over whether the Federal Reserve will deliver an interest rate cut in December, as policymakers signal caution and economic data that remains delayed. At the same time, weak flows into spot Bitcoin ETFs and a wave of leveraged position liquidations have added to the risk-off mood across crypto markets. Now we see Strategy Inc., that's on NASDAQ, there's upped its stake in Bitcoin by acquiring another 8,178 coins for about $836 million, according to regulatory filing. That brings the company's total holdings to approximately 649,000 Bitcoins, valued at about $48 billion on current pricing. The purchase was funded largely through recent preferred stock offerings, underscoring Strategy's unwavering buy and hold approach, even as Bitcoin hovers near $90,000 and the broader market volatility that's remaining high. Meanwhile, shares of MicroStrategy Inc. has dropped to a 52-week low at $194.54 as its crypto-centric business model that's facing growing headwinds. The decline comes amid faltering momentum in its signature asset, that's Bitcoin. High interest rates and investor concerns over the firm's heavy exposure to digital asset volatility. With its share price now trading closer to the bottom of its one-year range, which spans from around $189 to $543, the stock's sensitivity to crypto swings, that remains stark at this time. All right, that's it in the global space. I'll be back again at 1:30 p.m. for more updates on what's playing out with the markets that we track. Thank you for watching.
Thank you so much, Ladi. And just before we go, we see that there's a lot of activity going on in the market early today. In early trade, UAC of Nigeria, we see is in the green. Sterling Bank, however, Zenith Bank, MTN Nigeria, O&O, they are still experiencing profit-taking hangover from yesterday. We'll see what happens. As Ladi said, he'll be back at 1:30 to give updates on the markets and other issues on the economy. That will be Business Incorporated. And so I'll say thank you so much for being a part of this second episode of Business Morning. This week, we still have 3 more. That means we still have a lot to gist with you here on Business Morning. I'll be back tomorrow morning, God's grace. So do have a great day and make a lot of money.